Hello and welcome to CMS Forex News. I'm your market analyst, Nick Nassad. Today is Thursday, January 29, 2009. The rise in risk appetite brought about by a surge in U.S. stocks yesterday did not last very long. Though stocks in Japan were up, European equities snapped a three-session win streak, with key indexes off more than 2%, led by declines in banking and mining shares. The increase in risk aversion hurt the euro against the yen, following a test of the 119.50 area to end yesterday's global session. From that high, the euro-yen pair fell 280 pips to the 116.20 area. Weak employment data from Germany added extra pressure to the euro. The euro lost ground against the pound as well, falling from an intraday high of 0.9290 to a low of 0.9075, a more than 200 pip drop. That wipes out nearly all the gains for the euro from last week and is about 500 pips lower than the high at which the pair opened the week. The number of Germans out of work rose by 56,000 in December, which almost doubled the forecast of 30,000. The German economy is feeling the strain of the global recession as the export sector, which was a major source of job creation in the first half of 2008, has faltered. In Japan, meanwhile, retail sales fell 2.7% on the year in December, the biggest drop in nearly 4 years, and the fourth straight month that sales have declined. With consumers facing tough economic conditions and the prospect of being laid off, they're scaling back their spending. Weaker sales reinforce a negative feedback loop as companies are forced to fire more workers, which leads to more uncertainty among consumers. The euro-dollar pair fell in favor of the greenback today, following the dollar's gains in the wake of its FOMC meeting yesterday. We saw earlier that the euro was weak against its other rivals, so a fall against the dollar might not come as a surprise. However, data out of the US was very poor today, which might make one think that the greenback should be the one feeling the pressure. Today's theme of risk aversion was only reinforced by the weak US data, and it gave the dollar a boost as a safe haven. U.S. data showed that durable goods orders declined 2.6% in December, marking the fifth straight month that orders were down. It's a sign that the reduction in business spending will continue and prolong the recession. The drop in the headline number and the 3.6% decline in orders excluding transportation were both worse than expected. The number of U.S. workers filing first-time claims for unemployment increased by 3,000 to 588,000 in the week ending January 24th. That is an extremely high level, consistent with steep job losses for the month. The total number of people continuing to receive unemployment benefits soared to a record 4.77 million people. And in a third release, new home sales fell in December to the lowest levels on record. Sales dropped to a seasonally adjusted annual rate of 331,000, far below expectations. The figure will increase unsold supply and dampens any enthusiasm for a recovery in the industry this year. Stocks in the U.S. gave up their gains from yesterday, with the Dow Jones falling 230 points. That, plus the overnight falls in European equities, weakened the dollar against the yen, bringing the pair back to the 89.50 level after testing the high of 90.65 yesterday. The pound-dollar pair saw back-and-forth action in today's trading. The Asian session saw the dollar gaining, bringing the pair down to 1.4070, but the pound managed to regain its losses and traded in a zone that was close to its levels from the middle of yesterday near the 1.4280 level. Today's move saw the pair bounce down off of the 61.8% retracement level of the recent downswing we saw in the pair in the middle of January. Tonight, Japan will release a slew of data to end the month. Included will be info on manufacturing, household spending, consumer prices, unemployment, industrial production, and housing starts. Overnight, the UK posts data on mortgage approvals and consumer lending, while the Eurozone releases its flash CPI and its unemployment rate. Tomorrow, the US reveals its preliminary figures for the fourth quarter GDP, which are expected to be dismal, along with its Chicago PMI and final version of January's UMich consumer sentiment. Canada, too, posts its GDP data. And that concludes our broadcast for today. Thank you for joining us here at CMSFX.com, and we hope to see you tomorrow as we wrap up the week.